Hey, it's Sasha Evdokov. It is August 13th, 2015, and welcome to the Rapid Recap. Now, this week's lesson, we're going to take a look into keeping a great mental focus when stocks don't go in your favor. And I'll actually use a real-life example here because a lot of the things that I discuss are also based on real life. So I'll share with you a real life example as well, just based on our trip that's happening over here in Canada and how this applies to daily life, as well as the stock market. So this week we actually went to the War Museum. If you haven't looked at it, it's a fantastic museum in the Ottawa area. So if you're planning a trip to Canada, definitely take a look at the War Museum if you're in the Ottawa area. It's a fantastic place to see some history, see some coins, see some memorabilia, just a lot of different things that really allow you to reflect. Now, we did have the option to go to a few different museums, but we chose that one because it was a little bit bigger. And it really made me reflect a few things when in that museum, and it really can apply to stocks as well. In the stock market, we're constantly battling for leadership, for a win, and the same thing happens in war. And when you're in war, there's always someone trying to win or take advantage. When you're looking to make a trade, when you're trading on the stock market, there's always the bulls and the bears that fight. Now, difference is between war and the stock market is obviously you don't have fatalities when it comes to trading stocks, but you still do end up having a winner and a loser. So it really is just something to reflect and think about, that every time you're making a trade, there's always a battle that's happening really amongst other traders. So keep that in mind, is that there's always someone you're kind of fighting against, and whether it could be someone externally, someone else that's you're making the trades against, or it could be even your own internal battles that you're going through. For example, if you're going through internal battles of man, I'm not setting my stops in the right place, or I'm just not being patient enough, or just not being able to hold on to the stock as long as I'd like to, or not getting into the positions at the right time. I'm not patient, I'm not disciplined. So there's a lot of things that can happen in terms of your mentality and focus. And that's kind of today's lesson, is we'll keep talking about the great mental focus when a stock doesn't go in your favor, and something to think about and be aware of. So first, let's go into covering some stocks, and then I'll tell you a little story about what happened to us here on our trip here. Actually, it's a little funny, but it really does apply to the stock market. So first off, let's take a look at some of the stocks, how things are going. And the first one I want to talk about is Advanced Auto Parts. We'll get to this one a little more later. But here you can see, here's our trend line. We had at the 165 level, stock popped higher, broke out here on, we had 4.2 million shares. Initially, the acceleration of volume was going at 18.7 million, and then we went on 4.2 million shares, and that's on the weekly chart, and now we're accelerating at 9.2 million shares. And if you take a look at the daily, huge explosion of shares and movement of price to the upside. So that one looks good for higher prices. Watch out for a slight little pullback because it is extended. Apple, we've talked about this one for weeks and months. Check the previous rapid recaps. And if you're not getting a recap just about every single week, or about 45 weeks out of the year, then make sure you're subscribed to the newsletter, because not every recap is actually posted on YouTube to be able to see it publicly. So make sure you go ahead and take a look at that. But this one, we definitely talked about it for months. We had this consolidation pattern building, and we were talking about shorting it right here, shorting it here. So there's a lot of opportunities that you could have shorted it. Then we talked about it coming back here, and I said any bounce here is probably going to be sold off. So here was the entry point, really was right around this 125 if you could have gotten in it. But if you got in early, this was the sell-off right there at the earnings part, because it was acting weak for all these different sell-off points. So if you take a look at, here was the initial swing point, here was the second one you could have sold off here, shorted it there, shorted it here. Of course, you take profits in the strength and then you get back into the stock after earnings. But even if you got in it here or even on the break here, you would have been just fine. Just the run would have been 7-8 points. So if you would have had 8 points on 1,000 shares, that's $8,000 in just a couple of days. Now the stock bounced here. I said, let's prepare for that bounce. And then chances are when we have that bounce, we will reject it at this price level. So because this stock is in love, a lot of people love this stock. That's what happens. The stock's tried to come back up here. In fact, it kind of got up to this level from that point, and then it rejected it, sold off further. Again, it's bouncing now, but any of these bounces really are typically short-lived. So be mindful. Don't fall in love yet, and just take a look at the chart. What's going on? What's happening? Be careful right here at this level. When you get to this level at the 105, that's a pretty solid support level, so watch out for the bounce there or take some profits before we get there. But otherwise right now this one's acting weak. Even if we do get a little bounce to the 121 level, still in my opinion it's a little weak, and if it gets above that 121 on volume, then things might look a little different. But for the time being, it's definitely not on my radar for long. We're actually short this stock. Next one I want to take a look at is LDRH. Okay, this one's coming into again another few swing point areas, and these swing point areas you can see is one's here. We had another one right here. We had one here. It tried to get it right here, but it didn't make it, so it sold off at that level. So we have a few swing points here, and we're potentially coming into this support level right here. If it breaks that level right around that 39.25 level, could be creating another short opportunity. LXFT, a nice breakout. Here was our consolidation pattern. You can see stock consolidated, broke out. If we take a look at it right here on the weekly, it's a little tougher to see, but you can see there's slight consolidation. You can see how this stock's been moving. Little pattern, breakout, little pattern, breakout. The daily chart really just shows you that consolidation pattern moving well, powering to the upside. We're not in the position right here. We're trading lightly actually for the time being, just because we're on vacation, but we do have some positions on. And then Netflix, stair step pattern. Notice how this stock stair steps, and when we talked about this stock before, you can see that this stock pulled back and then powered higher. It's pulling back again, and it's potentially could power higher. So watch this support level of 116.64, 116. If you're looking for an even number, something around 116 or 115.65, 67. Watch that level or area as a support. But right now, look at this descending little trend line. It's starting to break out of there. So it could potentially pop and bounce at that level. So keep your eye on it. Panera. Here's the weekly chart. Again, watch these swing points, and these stocks typically will bounce here, so always be mindful. Here's a swing point, here's another swing point, here's a swing point, and then we're coming back. So we broke out, and if you were able to catch it and fortunate enough got in it right here, this was your long entry point. Take some profits, and now watch this level carefully, because this is where things could spell trouble. If it sells off here, then look out below. But for the time being, typically these kinds of stocks, they'll hold their support. They come back to retest it to hold the support. No position on this one, obviously. But if you're looking for it, wait for that bounce to take it higher. And I'll show you examples of those here in a bit. Post, looking at the weekly again, there's the swing point breaking out, heavy volume. There's your volume bars right over here, so you can see those, and it's taking that stock. Looks good for higher prices. Got Sabre. We talked about this with one of the members, one of the students, and he talked and looked at some of the charts. We talked about it, let's see, last week I think, or in the critical charts. Again, stock popped, broke out, came back slightly, and now bouncing a little bit. So it didn't fully come back to retest this level, so something you want to watch. But that's what stocks do, is when they break out, they come back to retest levels. to retry them, retest them time and time again. So if you look at it here, how this stock worked out, right there was the breakout point, came back to retest it, and boom, powered higher. So here was our trend lines. As you can see, that's how things work in the market. It's just being prepared for the movement, knowing how stocks move, how they behave. This one's kind of interesting. I like seeing these kinds of things. Here we have an A to B, B to C, potentially C to D. So it's building cause, nice short entry opportunity. Here's the next short entry point, would be right here when it clears 48.26 or 47.93 if you want to be on the safer side on volume, but this one's picking up speed. If you're in a stop right now, you want to watch that 75 level, but otherwise this one's creating that A to B, B to C, C to D pattern for those of you that have been with me and studied the A, B, C, D pattern structures. So here they are again. Let me point them out. A to B, B to C, and D should be down here. Same distance of A to B as we have C to D, or very close to it at least. We have, let's see, and the last one is W, Wayfair. So take a look at this one, building a nice consolidation pattern, powering higher, looking good. Watch for a pullback. It's a little overextended right here, so watch this level right here. Overextended, could pull back to this gap, but right now it's powering higher. So if you want, you could, if you normally trade, let's say 1,000 shares, you would trade 200 shares. If you normally trade 100 shares, you would trade maybe 20 shares. So if you normally trade 50 shares, let's just say you trade 15 shares, you know, and you could nibble some and see how that plays out, but you want that stop level to be right there at that 39.75 to be on the safe side. All right, so those are some of the stocks that I wanted to cover today. I do want to let you know a little story here, and keeping a great mental focus when stocks don't go in your favor. So this week's lesson is not everything is going to go in your favor in the market. Similar to how in life. In fact, actually, we were driving back just this week. So from the War Museum, it's you know, for us it was about a 45-minute drive or an hour drive to get back to where we were staying from the War Museum, because we're over here by the lake. And you know, on our way back, what happened was, I guess, because they're doing a lot of road construction and things like that, and debris picks up, and you know, we have a car and vehicle and so forth. So you know, we get home fine, no problem, wake up, and then you see a tire that's half empty on the car. So first things first, you know, you go ahead and you normally, what do? You put the spare on, you drive it, you get the tire patched or plugged or whatever, or get a new tire depending on where the nail or where the debris is. I couldn't look at it, I didn't see it. So obviously I just started to jack up the car and just pop the tire on the new one, the spare tire, and we have a full-size spare in the back, so really wouldn't have been a problem. But as we start loosening, or as I start loosening these lug nuts over here, they start breaking, and we just had the car tires rotated, everything, and I guess they either over tightened the lug nuts or they didn't properly tighten them, but in either case one of the lug nuts started to snap off. Okay, the second one started to strip. So, you know, things are not going in my favor. And you can definitely say that I was quite a bit frustrated. But in reality, the long story of it is you gotta know how you're reacting to the situations, because things don't always work out in your favor. For a job that I thought would be very simple, for a 10-15 minute job, you know, to change that tire, 5-minute job even, you know, you go ahead, put the jack on, put the handbrake on, you know, loosen up a few lug nuts, then, you know, jack up the car, loosen it up further, and no problem, put the other one back on and tighten it up, and you're good to go. And but in this situation, things just kept not going in my favor. And the thing is eventually you get to a point where you're just not in a clear stated mind. Things are just not working out for you. And in this case, you know, after snapping one of the lug nuts and then also having Since the closest repair shop here is about 25-35 minutes, we actually got a tow truck, and we'll send it out, and we'll have to put couple new lug nuts because one is stripped and one is broken, and have to send the car off to a shop. So that's what I ended up doing. But you got to realize that at certain points, when you get to this level, there becomes a point where you're not as clear-minded, you're not as clear-focused, and it's just not worth the time. Now, I could have probably done it myself and, take the brake calipers off and do it. For me, I've done little things like that in the past, but I'm not a mechanic. And when you get to this point where you're frustrated, when it's not something that you're specifically great at, when it's not something that you have experience at day in and day out, because me personally, I'm not a mechanic, then you want to go ahead and move on and just say next. And the same thing goes in the market. When there's stocks that are not moving in your favor, not acting, not behaving the right way that you believe they should be behaving, you have to say next. Because not everything is going to go your way. So let's say you're looking at Panera here, and you have this trend line right here. The stock broke out, and you expected it to continue moving. You expected it, to continue moving this way, but it starts to pull back. And that's not exactly what you expected the stock to do. So when you start seeing this stock pulling back and it's not what you expect, and things are not moving in your favor, and you got a bigger position than you should have, then you should sell that position, get out of that position, and look for another stock. Now, as you gain experience, you'll know how things behave and what to do in situations. Similar to my situation, if I was more savvy with, popping out the brake calipers, popping out the lug nuts, changing them, and so forth and so on. If I was more savvy about it, I probably could have done it. And the same thing in the market. If you're more savvy, if you're more advanced, you probably can see what's going on and what's happening. You'll be able to see what's happening underneath that stock, whether it's coming back to pull and bounce. Similar to how with Apple here we talked about, which is one of our largest positions right here. When you see that stock right here bouncing off of this level and then selling off, okay, when you see it bouncing, a lot of people would have gotten into this on a long position. Okay, thinking, oh, it's going to go higher, especially if you're a beginner, if you don't have the experience. But if you have the experience and you're a more advanced trader, or you just have some background experience of knowing and reading how stocks move, and especially how this company specifically moves, then you know that probably that bounce right around this level is a fake out. So in this case, you would still go short even though that stock was popping higher. And the same thing in this situation. Right here, we had multiple sell-offs. So this was our first swing point, second swing point, third swing point. By the time you get to the third swing point, you have some of these beginners that would go into this stock right here and think it would go long and continue to going long. But what happens is the professionals right at this level start shorting that stock, and that stock starts getting sold off, and that's why it continues moving lower. Now again, it'll bounce at this level because you have value buyers. But then again, over here, what happens? We had it happen 4 times. Even if you got caught it the third or fourth time, you'd still be in a winning position, right? Because patterns typically repeat. Sometimes they happen 5, 7, 8, 10 times. So that's why you're watching this level. And again, you have that short opportunity. Even if you miss that one, you wait for the break here. And when you waited for that break, your opportunity for the safe side could have been even right here. And then you still would have captured a $4 or $5 run to the short side. But this comes with experience. And if you're lacking the experience, something that you have to be honest with yourself about, if you're new to the market and you don't have the experience, then you're going to have to learn or trade slowly or develop those things. But if you're new, it's going to take some time. It takes time to build that mental focus, to keep that calm when you're not that experienced. And the more experience that you get in certain situations, such as trauma units, nurses, doctors that deal with situations where there's a lot of blood or life-saving that has to happen, they can really keep a very calm mindset because they've done it before. They have experience with saving lives. When someone's bleeding and they're about to die, they have experience to stay calm during those moments. Now, in your case, when you're trading a stock, if you're new to trading, which you have to be honest with yourself and be emotionally intelligent about it, being aware at how good you are at understanding and evaluating your mental focus, if you notice and realize that you're lacking that experience, then you may want to trade lighter, or you may want to watch your positions a little more closely, that if the stock hits your stop, you're out. But as you get experience, you get more comfortable in these situations. So the long story short, or the lesson or the moral of the story, is that always maintain a clear mental focus when trading. And how do you really ultimately do that? You ultimately do that by trading smaller. If you trade very small, the risk is less. And when the risk is less, you're able to keep a calmer mind. And if you can keep a calmer mind, then larger movements or volatility within the stocks do not affect you as much. However, if you're getting frustrated, if you're getting stressed out, chances are you're probably trading too big. And just the same thing with like a tire, a car breakdown. If you've never had experience doing it, it could be a frustrating thing, especially if things don't go in your favor. Same thing if you have to save somebody's life from choking, all kinds of different things. So always watch how your mental focus is. Be aware of how your mental focus is. And once you start noticing and realizing those frustrations are in you, move on, go to the next stock, or try something different. But always trade lighter until you build that experience. All right, so I hope this recap was helpful. I hope you enjoyed the lesson. It is 3:50 over here on the East Coast right now, so I'll be posting this recap in the next 30 minutes right after the market closes. But in either case, thanks again for sticking with me. Another great week, and especially wonderful to hear from all of you on the emails. And again, if you're not getting all the recaps every single week, or at least 45 weeks out of the 52, then make sure you're just signed up on those email lists, and that way you'll get those rapid recaps and get some insider lessons, some of the stock picks, and so forth of what's happening. Now, I do plan to post some critical charts here in the next day or two, so we have another handful of charts to post, even more so than what I went over here. But other than that, enjoy the rest of your week. Make it a great one. Stay safe, spend some time with the family, and keep a smile on. And I will see you next week. All right, thanks again, and take care.